Welcome to Castified. Today, we're really getting into something big, something that's shifting the global economic map as we speak.
Yeah, it's happening fast.
We're talking about President Donald Trump's latest round of tariffs. Now, the administration is framing this, as a way to boost American factories, bring money home. A big day for America, is the quote.
That's the official line, definitely.
But is it that straightforward? We want to unpack what these big economic moves actually mean for different countries, for the markets.
And for you, listening, because these things ripple out.
Exactly. Is it smart negotiation? Or maybe something else. A tangle of consequences? Maybe. Winners, losers, popping up where you don't expect. Let's dig in.
Let's do it.
Okay, so let's unpack this. The basic idea, the way the administration sells it, is using these tariffs as a tool, right, to help U.S. exporters keep imports out and really push for more manufacturing right here in the U.S. The president himself said something like, money's going to pour into the United States like we'd never seen before.
A very bold claim.
So these tariffs came through an executive order. They were supposed to hit August 1st.
Right, that was the initial date.
But then, almost last minute, they pushed most of them back to August 7th. This affects, what, nearly 70 countries?
Yeah, and the whole EU, the 27 member states.
And if a country wasn't specifically named, they get a default 10% duty.
A baseline, basically.
Now, this isn't totally out of the blue. We saw those blanket 10% tariffs back in April.
I remember that. Caused quite a stir.
Yeah, global concern. Stock markets dipped, which led to that 90-day pause on the really steep ones. It sort of feels like we're in a cycle here, doesn't it?
It absolutely does. And if we, connect this to the bigger picture, these new rates, they aren't just pulled out of thin air.
Okay.
They seem to be based on, trade imbalances, for one, where the U.S. is buying a lot more from a country than selling to it.
Makes sense.
And also the kind of economies these countries have, their regional profile, the market reactions, they really tell part of the story.
Like what?
Well, European stocks dropped pretty fast. Hit a 3-week low, investors clearly worried.
Okay.
And Asian shares, they had their worst week since April, right after the announcement.
Wow.
But interestingly, oil prices didn't really budge much, actually went up for the week. Maybe the energy market sees it more as, trade posturing than a huge hit to demand.
That's interesting. But here's where it starts to hit home, right?
Yeah.
Experts are warning. These higher costs for businesses importing goods.
Yeah.
They don't just stay with the companies. They could end up hitting us, the consumers.
Right. If companies can't absorb the costs or won't.
Then prices go up for clothes, cars, whatever. And that's just fuel for inflation, isn't it? Which hits everyone's wallet.
Absolutely. Can slow down the whole economy. It's that classic tension. Protect industries now, but risk broader economic stability later.
It really is.
And this brings us to that point where, the devil's in the details, as they say.
How so?
The White House is playing this up as, Trump's negotiating skill, billions flowing into the Treasury. But the reality seems a bit messier. Looks like formal written agreements, only done with about a dozen countries, plus the EU deal framework.
Only a dozen?
Yeah. And out of all of those, only the UK deal is actually signed, sealed, delivered.
Seriously?
Many others are still talking, and this is key, the agreements lack the crucial fine print. So it really makes you wonder, doesn't it? How stable can things be when so many deals are still kind of up in the air?
That's a really powerful point. If these deals are so, uncertain, what does it actually mean for different countries? It must be a real mix out there.
Oh, definitely. A total mosaic. Some got big reductions. They're breathing easier. Others got hit harder, maybe even unexpectedly. And a lot are just stuck in limbo, waiting for clarity. Like playing chess blindfolded, you said? That feels about right.
Yeah. Let's maybe start with China. Their reaction seemed pretty clear-cut.
Very clear. Strong opposition. They basically said U.S. protectionism just hurts everybody.
Right. The quote was something like, there is no winner in a tariff war.
Exactly. They see it as just destabilizing for everyone.
So what's their actual tariff situation now?
Well, it's complicated. There's a 30% combined tariff set to apply, but there's a pause until August 12th.
Okay, a short pause.
And that came after things got really heated earlier with threats of like 145% tariffs on some things. Huge escalation.
Wow.
But what's really interesting now is that China is reportedly already in advanced talks for potentially a better rate, maybe even waivers on some other tariffs.
So even that 30% might change.
It could. It just shows how fluid this all is. Constant negotiation, even between the big players.
Okay, from China, let's look at some key neighbors. Japan, South Korea, how are they faring?
Different stories there, too. Japan got 15%. That's way down from the 25% they were initially threatened with.
So some relief for them.
Yes, but the Bank of Japan is already warning that Japanese companies expect lower profits because of this. And they're already scaling back plans for investment, new factories, R&D, that kind of thing.
That's significant.
And get this. Japanese car makers, instead of raising prices for U.S. buyers, they seem to be just eating the cost.
Really?
Yeah, their export prices have fallen about 20% since April. That's a massive hit to their profits, just to keep their spot in the U.S. market.
Wow. Okay, what about South Korea?
South Korea's situation is, fascinating. They also got 15%, down from 25%.
Same in Japan, then.
Rate-wise, yes. But here's the catch. No written deal yet. It was apparently just an oral agreement during negotiations.
Just oral? That sounds risky.
Their trade minister basically said they're in a new normal era and they cannot be relieved because who knows when the pressure might come back.
Understandable. That lack of certainty must be tough for businesses.
Exactly. And Taiwan, they got 20%, but their president called it temporary. Hints that maybe it could go down if they reach a bigger deal later.
So even where the numbers look better, there's this undercurrent of instability.
Precisely. The headline number doesn't tell the whole story.
Right. Now, let's shift over to Southeast Asia. I heard there's some really big reductions there.
Yeah, some dramatic ones. Thailand, for example, went from 36% all the way down to 19%.
That's a huge drop.
And Cambodia, even more striking, they were facing tariffs between 36% and 49%, slashed down to 19%.
Wow. Nearly halved in some cases.
For Cambodia, that's massive. Their garment sector is everything. Biggest economic driver, maybe 1 million jobs tied to it.
1 million jobs.
Their deputy PM basically said the industry would just collapse at those higher rates.
Jeez. That really puts it in perspective. It's not just numbers, it's livelihoods.
Absolutely. And Malaysia apparently had a positive outcome, too.
But is it all smooth sailing, even with lower rates? Like for Thailand?
Well, Thailand's case is interesting. Their negotiations were slow, took longer than others.
Why is that?
A lot of pressure, probably. They depend heavily on the U.S. market. About 1/5 of all their exports go there.
High stakes.
And they likely had to give ground on some things. Pork imports, for example. Thai farmers are apparently quite worried about competing with American pork.
Ah, the classic trade-off. Concessions at home for better access abroad.
Exactly. And even with this deal, like we talked about, the lack of specifics is a problem. Manufacturers are still uncertain. It's not really a deal if you don't know the rules, right?
Right.
Plus, there's this whole transshipment issue.
Transshipment. What's that?
It's about goods being routed through a third country, sometimes to hide where they really came from, maybe to dodge tariffs.
Okay.
The U.S. wants to slap double tariffs on goods coming from Southeast Asia if they have too much Chinese content.
Ouch. That sounds complicated.
It's a nightmare for manufacturers there because their supply chains are so intertwined with China. These rules could really hurt legitimate businesses, force them to rethink everything.
So even countries that got deals like Indonesia and the Philippines.
Yeah, they got deals too, but reports say they still don't fully agree with the U.S. on the exact terms. So it's a deal, but maybe not quite done.
Okay, moving over to Europe. The EU seemed to fare better.
It looks that way. They secured a framework agreement. Their trade chief called it a more competitive position for EU exporters.
What do they get?
A cap, basically. 15% all-inclusive tariff cap. The idea is it brings stability, trust back into the U.S.-EU trade relationship.
A predictable cap sounds pretty good compared to some others.
It does. But then you look right next door. Switzerland.
Ah, what happened there?
They got hit with 39%.
39. That's high.
And here's the kicker. It's up from the threatened rate of 31% and more than double the EU's rate.
Wow, that seems punitive. Were they expecting that?
Apparently not. Reports suggest they were quite surprised, expressed great regret, especially since Swiss companies invest a lot in the U.S. Think pharma giants like Roche, Novartis.
Yeah, big investors. It's strange they'd get treated so differently from the EU. Makes you wonder what else is going on behind the scenes.
It certainly does.
Okay, let's swing over to South Asia, India.
India's facing 25%, slightly lower than what was threatened earlier.
25%. Still significant.
But there's more. There's talk of an extra penalty, though the details are fuzzy.
The penalty? For what?
For buying Russian weapons and energy. President Trump even sort of lumped India in with countries anti the United States and called it an attack on the dollar.
So it's definitely mixing economics with geopolitics there.
Absolutely. And this raises that same question again, uncertainty. Businesses in India, especially in textiles, are apparently hesitant. They don't know what this penalty actually means.
Can't plan if you don't know the rules.
Exactly. And the U.S. seems frustrated with India. The Russia ties, but also sticking points in trade talks like agriculture, dairy.
How's India responding?
They're basically saying it's their sovereign right to buy energy where they need to based on their national interest, standing firm.
A clash of views. What about others in the region? Sri Lanka, Bangladesh?
They actually saw big reductions, down to 20%.
Okay.
Yep. And Pakistan got 19%. They're hoping it marks a new era of economic collaboration. So yeah, a real mixed bag across South Asia.
Definitely. Okay, finally, let's touch on the Americas and Africa. Canada's situation sounds unique.
Unique and, frankly, quite stark. Yeah. Their rate didn't just stay the same, it increased. It increased to what? From 25% up to 35%. And no delay, effective immediately. Wow. Why is such a jump? President Trump explicitly linked it to several things. Prime Minister Carney's plan to recognize a Palestinian state at the UN.
Okay.
Canada supposedly not doing enough on fentanyl trafficking, and he even called it retaliation against unspecified U.S. measures.
That sounds much more political than purely economic.
It certainly seems that way. Very complex dynamic there.
What about Mexico? Big trading partner.
Mexico got 25%, which is down from the 30% threatened. They have a 90-day window to negotiate further.
And is that linked to anything?
Also, fentanyl trafficking explicitly mentioned. And during this 90-day period, there are specific tariffs mentioned, 25% on cars, 50% on metals.
High stakes for those sectors during talks.
Very. Elsewhere, South Africa is using the delay period wisely, trying to negotiate down from its 30% to save jobs.
Smart move.
Australia, facing the minimum 10%, might actually find itself more competitive against others facing higher rates.
An unintended consequence, maybe.
Could be. And then you have Laos facing one of the highest rates at 40%. Just shows the huge variation across the board.
It's just fascinating, isn't it? How these percentages, these numbers on a page, they're not just abstract economic data.
No, not at all.
They directly change things for real companies, real people, real industries all over the world. From the price you might pay for something to whether someone keeps their job in a factory far away, it really brings the human element into focus.
Absolutely. And think about the ripple effects, the broader implications.
Go on.
For businesses like those Japanese car makers we mentioned, they're absorbing huge costs. That hits their profits, sure, but it also limits what they can invest in for the future.
Right. Less innovation, maybe fewer jobs down the line.
Could be. For governments, it's this incredibly tense negotiation game. Like Thailand giving ground on pork imports. Constant pressure, tough choices between pleasing domestic groups and securing international deals.
A real tightrope walk.
Definitely. For workers, the threat is immediate. Think about that Cambodian garment sector. 1 million jobs potentially hanging in the balance.
It's stark.
And that underlying uncertainty we keep coming back to, so many deals are vague or just verbal. Countries don't fully know what's coming. That transshipment issue in Southeast Asia, still a huge question mark.
Yeah.
Of course, from the U.S. side, the narrative is consistent. Bringing billions into the Treasury, strengthening America's hand, that's the stated goal. But the shockwaves are felt everywhere.
So we've covered a huge amount of ground today. Tried to make sense of this really complex, fast-moving global trade picture shaped by these new tariffs.
It's certainly dynamic.
Yeah, some countries got relief, maybe temporary. Others are facing serious new pressures. Winners and losers are still shaking out, and everything feels, well, uncertain.
And this really raises a big question, maybe something for you, our listeners, to think about. How might these shifts, this kind of instability in global trade, reshape more than just economies?
What do you mean?
Well, international alliances, dependencies between countries, how might those change in the long run? Especially when everyone's navigating this new normal without clear, signed rule books. What does it really mean for the supply chains that deliver goods all over the world? And at the end of the day, who actually ends up paying the price?
That's a lot to think about. Our goal here at The Deep Dive is always to give you the context, the insights to help you navigate these crucial, complicated topics. We want you to be well informed.
Absolutely.
We'll be back soon with another deep dive.